This is episode 96 of the Andrew Hines Real Estate Investing Podcast. Welcome to episode 96 of the Andrew Hines Real Estate Investing Podcast. Today I have Cody Yeh on the show, and Cody is an investor in real estate, but he actually started as an investor in stocks. He was into day trading, then he got into stock option trading and real estate investing at roughly the same time. He managed to quit his job. He started as an engineer working for Honda. He quit his job and now he's full-time into his options trading and his real estate investing. And of course, he's got many other gigs on the go, including helping a wholesaler with his business. He also has a YouTube channel. He's very entrepreneurial minded. And I'll be quite frank with you here, this conversation went all over the place, but I like to let entrepreneurs speak. When people have good ideas, I like to let those ideas come out naturally. By now, you probably know my interview style. For those of you who are new, you're going to see it here. But I did find this to be a very interesting episode. There were so many parallels between what Cody has done in the stock trading world and in the options trading world and what we as investors do here in the real estate investing world. So we went over those parallels. We went over what Cody's up to. We also dove into this topic of options trading, which so many people have mentioned on this show. So this is one of the reasons I wanted to have Cody on, because so many people mention this. So many people around me, including Mark Loeffler, Erwin Zito, Cherry Chan, Josh Doyle, to name a few. These are all people who have recently been on the podcast. They're all into this, and I've been scratching my head about it for quite some time because I like to stay focused. So I really wanted to pick Cody's brain here, and I'm constantly asking all these guys, is it worth it? Is it worth me focusing the time? So Cody does throw a few plugs in here. As always, this is an unpaid appearance on the show. However, after the fact, Cody mentioned to me that if people do come because they found him through this show, that he would give me a little bit of a referral fee. So if you want to support the show in that way, please make sure that you let Cody know where you found him. Before we get going, there's a couple of things that I wanted to mention to you. As always, if you're new to this show, I can't stress how important it is to go right back to the beginning, especially if you're a new real estate investor, because back at the very beginning of this podcast, which started in the beginning of 2019, we really dig into how the numbers are derived. So even on the YouTube version, I actually show my Excel sheets. I walk through the breakdown of how the returns are calculated. I don't dig into the basics as much now for natural reasons. We want to keep the discussion progressing and make sure that we're making use of the interviews the best we can. So I don't focus on those basics quite as much, but if you want to go right back to brass tacks, I would suggest going right back to the very beginning and working your way through that first 30 interviews. And I think that you'll really be glad that you did, because those early interviews, as well as all the other interviews in this podcast, are just filled with very knowledgeable guests that are sharing very relevant content in today's market. The other thing I wanted to mention to you is you can grab my cash flow sheet on my website, andrew-hines.com. If you want to follow along with the numbers that I calculate on this show, I use that spreadsheet on pretty well every episode now. And then just finally, if you have not already done so, please rate and review this podcast on Apple Podcasts. If you're watching on YouTube, give it a like, leave a comment, make sure you subscribe and hit that notification bell if you have not already done so. Thanks for being here with me today. Please enjoy episode 96 with Cody Yeh. Hello and welcome to the Andrew Hines Real Estate Investing Podcast. I have Cody Yeh on the show, long overdue. Cody's a very interesting guy and he's going to tell us all about it. Cody, thanks for coming on.
Yeah, thanks for having me.
Okay, so Cody, first off, we've talked a lot about the non-real estate things you're up to,
yes,
and including the stock activities. Why don't you just give me a little bit of a rundown? I know you're in real estate, but
yes,
you obviously started investing primarily in stocks, and now you do both. You do a hybrid.
Yes.
Give me the story.
Yeah, so I came to Canada when it was 2010, 2009. I was about 18. I came here for university, right? I went into mechanical engineering, study at University of Toronto. I thought I don't have to write reports, so that's why I went into it, and that wasn't true. And right after I graduated, I started working as a project manager at Honda Manufacturing, and that's where I worked there until beginning of, really in 2019, right? And in the meantime, I was like hustling at night between like attending real estate, seminars, and I was actually doing day trading for 2 years at one time, trading in the Asian market thanks to the time difference. And I was playing with stocks since 2011, and then I was playing with stock option on the side while I was doing day trading. So day trading at night, stock option a little bit in the morning. And and then I stopped day trading because I found myself fell asleep in front of big four monitors, right? 4 days in a row. I had a big position on. So I was like, hey, you know what? I'm actually making quite some money in the stock option using my phone and, trading 15, 30 minutes per day. So maybe I should just do more of that and do less of a day trading. But where it got me here is all those experience, right? From real estate, that accumulated my capital, and my day trading where it gets my fundamental down for technical analysis and all that, right? That's
So the base capital, and we're not gonna skim over this, but the base capital came from your stock investing or your day trading.
I mean, no, like, but the base capital mostly came from my job, 6-figure job. I was working a lot of overtime, moving up the corporate ladder, right? And then take on more responsibility. And then the real estate I bought, like first real estate in 2016, second one 2017, and two more in 2019. That's where, do the burst strategy, pull out the money. And that's where most of my funds come from, right? And my trading account.
Right. Okay. So did you mention to me that you were full-time day trading at one point?
No, not full-time.
No, so you were always working at Honda and then just doing this on the side?
I was working from 7 to like maybe 6, play some hockey. I learned my hockey there. And then I just go home. I prep for an hour or two, right? I trade for an hour or two, and I write report for an hour or two. And just reflecting on that day. What did I do? Is that part of my strategy, or was it because I was fearful, because I was greedy? And I hand drew out all the charts for 2 years in a row. So there's like more than 700 charts
of your actions in stock trading.
And all in PDF, right? I still have those in somewhere in my hard drive.
Okay, so why? I mean, the average Canadian does not have that drive to do what you were doing there, to come home and then stay up all hours of the night doing the secondary gig. What was it? What were you trying to accomplish there?
I don't know. I think I was kind of nuts in a sense. But I study engineering. That's what they train me to, like, be very hands-on and figure things out. And I just thought, hey, I think this day trading maybe could work. If it doesn't work, this is a base for a lot of better stuff out there. And I just say, hey, you know what? I want to take the plunge. I want to see how it goes, right? And then all the, like, a lot of people don't realize is that a lot of times is not one thing you do that would just be successful right away. It's a lot of things that you do. You figure things out, and all those things add up to your success later on. So a lot of people only see the front end of things. Hey, now Cody's teaching a course. Now Cody's taking VIP clients, investing together with partners, but they don't see all the story behind it, how to grind through that.
Yeah.
Right?
I can definitely relate, because all of my 20s was just nothing but failing pretty much until the very end. Like, just failing, losing money. And I'm like, I don't have much to show for this, but I learned a lot. And then then all of a sudden something clicks, and then all those lessons you learned, now that all comes into play, and now you can avoid all the mistakes and focus in on the successes. Yeah,
it's scary how just for the past like 1 year, the amount of, like, everything just stack up so fast. Like, I'm still talking to my accountant, and we're on the phone yesterday. I was talking to her like, what should we do with all these money, all that. But anyway, that's a different problem. My accountant was laughing like, you have some beyond first world problem. I'm like, but we need to figure it out, right?
Yeah. So walk me through a little bit of what's changed recently. So the day trading, evening trading was going well. You were doing well in that, making good profit. But then you got into the option trading, which we've had a few people on this show talk about that.
Yeah.
How did you stumble into that? Because I know Mark's doing that, Erwin's doing that, Cherry's doing that.
Yeah.
What's your story with that?
So I mean, I learned that stocks and about options back even in university. So I studied engineer, but I was minor in business. So we learned through corporate finance, engineering, accounting, actually business accounting as well. So in that course, they actually talk a lot about stocks, option, how everything works. But what I feel is that I feel like the person who's teaching it, whether the professor is not doing it himself or he's just being too general. He's just kind of say, hey, this is how kind of the pricing works. It's kind of like real estate stuff.
Yeah, it's not directly applicable. And I know, because I took the same type of courses at Ivy when I went there. Like, they taught about this stuff, but it wasn't like you could go out and apply it.
No, you can't apply it. It makes sense. But I'm not hyped up to do something, right? It's only until I start doing it. And I took many other courses, right? And I figure out everyone's doing like all whatever they're teaching. Maybe they're being safe or trying to protect themselves, whatever. For whatever reason, whatever they're teaching there's a gap between like concept and actual execution, right? So I took many courses. I spent thousands, if not more than 10,000, actually a lot more. And then I figure, hey, you know what? There's a void out there. I can fill that void, right? So that's where I start my course in October.
Okay, so you took a bunch of people's courses on option trading or on day trading?
I had a coach in day trading, and from 2016 to 2018. I mean, I don't want to talk about my coach. She's very private. She's from Taiwan, and she's 2 years younger than me. So I just turned 30. She's 28. So when she was 25, she was very low key, but driving Rolls Royce around. It just looked like a high school girl driver. Yeah, it looks like a trust fund baby, but she's actually not. So did
it all on her own.
And she started taking investors' money, whatever. But
so you learned how. See, this is, and we are going to get into real estate. Don't worry. But you learned how, and I always like joke about this, or maybe it's been a while since I've made this joke. But it, like Warren Buffett says, don't try and beat the market. Like put your money in an index or whatever. Buy those S&P 500 stocks, and most people will never beat the market. But you found a way to do that by taking the right courses, learning. I don't know, certain algorithms. A lot of
trial and error on my end, right? And I make all those mistakes. So now when I teach people, I say, hey, these are all the mistakes I made. Friends and family I taught over the years, say, these are all the mistakes they make. Please don't make them. Please don't try them. We make it for you. So now I can avoid a lot of those, right?
Well, and then this is just the parallel, right? We've talked a lot about this, you and I. I'm like, well, I went through that with real estate. You went through that with stock trading and then options trading. Is the mistakes will get made. You learn from mistakes, mentors, or paid coaching, I guess.
Yeah.
Mistakes and mentors really though is the way it goes. So you've done probably a little mix of both.
Yeah. I mean, now I just realized the fastest way to really learn from someone or get someone on the phone or on a call, right? For example, so last week I was trying to get a big YouTuber on a call, right? Because I want to learn from him. So I say, okay, you offer personal coaching. Okay, $250 USD. That's a very cheap way for me to get into contact with you for an hour. So I just pay it. We just got on the phone, and I think at the end, I'm not bragging, but I think he actually learned more from me because the way I run my course, the business model and all that, he said, oh, wow, that's pretty cool. I will look into that. I'm like, yeah, but
I've also been in that same boat where I paid somebody for coaching. By the end of the call, I feel like he was asking me more questions. I'm like, okay, well, you can always learn something from someone, and maybe you just have a different skill set. But that's like, I love those conversations because you like equally win. You're just talking about different things. But the comment I was going to make before is that Warren Buffett says, don't do that. Most people who try day trading don't make money in day trading. Whereas real estate is like the most forgiving thus far. It doesn't mean it will be forever, but it's not hard to look like a genius in the last 5 years in real estate. Like, I'm not trying to put anybody down, but the people with the lowest IQs are still finding a way to make money in this. Now that can change, and we're seeing that change in Toronto, and that's a short-term thing, maybe more than a long-term thing. But this is where stocks are so difficult. So now you transitioning from something that's very difficult to make money in to something that's a lot more people are making money in.
Yeah.
What kind of success are you seeing so far now that you're focused in real estate? Well, you have two focuses, but that is one of them.
To answer that question, something just came to my mind is why people lose in day trading. It's not because they don't know what to do. I was been taught what to do by my coach exactly, just like the way I'm teaching people now. But day trading is very hard. It's like playing real estate, but then you can actually liquidate your house in 1 second like that. So the moment the market pull back, people panic. But because real estate takes longer to sell, people say, you know what, I'll wait a little bit. I can't play around with it. So I would just wait. And then usually those wait will just eventually goes up, right? But imagine if you can do the same thing with real estate, you're probably losing money.
You can't sell it in 2 seconds. So the market adjusts and people just lose money in 2 seconds because they sell their position.
And most common thing in stocks or in real estate you can't do that. Most common thing in stock is when the stock pull back, people sell. When it go back up, which is higher than the previous high, they say, oh, I missed out. Okay, now I buy it.
Now you buy more. And then you just lost the whole bunch.
Right? And every time you do that, you miss more and miss more. And if you do that too often, you just roll all your profits, right?
So in other words, you're saying people don't have the discipline in stock.
It's the patience and the discipline. And then it's more like a machine, right? You got to know your fundamental, know your strategy, you have the confidence, right? And that's where the execution side comes in, right? You got to know what you're doing. And once you do, once you have it, just have that confidence. Same in real estate, right? If you know the fundamental, I know you might have you think that in the short term there might be a small drop and all that, but in the long term, we still have a very strong fundamental in the GTA area, right? So knowing that, even there's a small dip, instead of actually selling and panicking, maybe it's a good time to put in a little bit more money, right? To capture that, right? So.
Yeah, and I really want to draw out these parallels because investing's investing. And people can make, it's funny that you point out the same mistakes can be made in both. It's just harder to make that mistake in real estate because it takes longer. You have to list the property, find a buyer, have a closing date. So there's a lot more that has to transpire in between there.
Yeah.
So you like the GTA?
Yeah, I invest in Barrie, I invest in Toronto. I mean, we all know the numbers, right? More immigrants in the coming years. 40% of them are coming to the Golden Horseshoe and the GTA area. We have the most diverse economy in Canada, compared to a lot of different provinces. A lot of young immigration coming to Toronto. I came from Vancouver, right? So I know the mentality there is mostly a retiree, and it's really only finance, service industry, and real estate, but nothing else. There's no manufacturing, not much of that, right?
Right. Yeah, and I agree. Toronto is pretty diverse. So I like the GTA a lot. I just don't like the lack of cash flow. But when you can find cash flow here, I think that it's very well hedged because there's so many different industries, as you've pointed out. Toronto proper, as I've been saying, I feel, especially in the condo market, it's been overinflated. So I feel that we're going to continue to see an adjustment down there. But in the long run, of course, I see it going back up. It's the question of when. How long do we wait?
Yeah.
And do people have the stomach for it?
Yeah.
Going back to, can people be disciplined to wait it out if they believe in the fundamentals?
Yeah.
And to me, as I've said so many times, you don't have cash flow, you probably won't have that stomach.
Yeah, I mean, you brought up a really good point. Cash flow is what kept the business running, but cash flow is really not make most of the money in real estate. It's appreciation.
Yeah.
But without cash flow, you're going to get pinched. If you only have one property, yes, you fill the hole. But when you have 10, 20, 30, every one of those, you need to fill the hole of $10,000. That's going to be a big problem, right?
Yeah.
$300,000 in a month.
Right.
That's going to be a big problem. So that's where the cash flow has to sustain the business in case of a market downturn, right?
Right. Yeah. Well, because you're seeing it right now in the Toronto market. First off, we've seen rents come way down, especially in the core with condos.
Yeah.
So all those people who didn't have cash flow already, now they have a gaping hole. Now they've got maybe $1,000 a month deficit. When you just watched $100,000 of your value erode and you're losing $1,000 a month, what's the gut tell you? Well, if you're relating it to what you're doing in stocks, oh my God, I got to sell.
And when you want to sell, all your neighbors want to sell.
All of them want to sell.
So
and then they drive
timing.
The price down more.
Yeah.
And oh man, this is what I don't like about this situation, because I feel bad for the people that are in these situations.
Yeah.
We were fortunate enough to sell my wife's condo just the right time there.
Nice.
But that's because I was predicting this.
Nice.
And
wow.
I don't mean to be right. Well, I like being right, and I also don't like it sometimes. But it's nice to be validated and know, hey, I saw that coming. And it's just trying to step back and not be emotional. Like if you look at these market factors, if you look at what's happening, you kind of have an idea that, hey, well, wait a minute. If no one wants to be downtown because all the fun has been sucked out of being downtown, you can't go to Blue Jays games. You can't go to the bar. You can't really go to restaurants now.
Yeah.
You can't even use your pool or gym at your condo.
No.
Where's the benefit? So you were paying a premium to live downtown when there's no longer a point to that, which is why I think we've seen that exodus. That's why I think we're going to continue to see it. What's your gauge on it? Like, how far do you see condos dropping? Do you have any thoughts there?
My mom lives in the downtown Toronto.
Yeah.
We have a condo there as well. I used to live there when I went to university. It's way different. Back then, the traffic was crazy, right? Friday night, like walk up, everyone's on the street.
Everyone's everywhere, yeah.
Now it's like a ghost town.
Mm-hmm.
But I think it's a short-term thing because, a lot of U of T program or like other university, they really don't offer, like if it's a hands-on program, they just basically defer for a year. So all those international students basically went back to their own country. Mm-hmm. So there's a vacancy problem, right? This vacancy goes up. Now, another thing is people who ever work in downtown used to say, I want to stay in downtown because I hate the commute from Markham to downtown. It took me an hour and a half one way. So I want to move downtown. I'd rather pay more. But now most people can work from home, or at least, only a day or two they need to go into office. So they say, hey, if I can sell my condo in downtown for $400,000 to $600,000 or even more, but instead, if I drive out 1 hour, half an hour to 1 hour, I can buy a house. I have a backyard to live in. Now I work from home anyway. I want more space. I can walk my dog. I can let my dog out in the backyard. It's the same amount of money. So I sell my condo here. I can buy a house. And I know house has a land value as well, right? I don't need to go to work so often. It's COVID. Everyone wants to stay away from each other. I just want more space, right? So I think that short-term impact is definitely stacking up. But in terms of long-term, I think next year there will be really where, the company going to decide, hey, COVID has been running for a year. Are we going to fundamentally change the way we work? Because I mean, if everyone's working at home, it's very productive. But if there's half people working from home, half people working in the office, I think there's going to be a problem. Because imagine in a meeting like this, there's someone over the phone. They don't know our face expression. They don't know what we're talking about.
I don't think it'll ever be as productive. I think it could be close, but I don't think it'll be as productive. And I think that employers, some of them have tried this and are just fed up with it. Some of them it's worked.
Yeah.
And I think a lot of them are just weighing the potential liability and saying, well, you know what? We don't want to risk it.
Yeah.
But there comes a tipping point. And I do believe, if we just allowed everybody to get right back, I believe Toronto would be bustling in no time. Rents would be driven up immediately. Like if tomorrow, for some reason, this whole situation was gone.
Vaccine comes out.
Yeah, whatever it is, like
good.
The situation's gone.
Yeah.
And there's no more fear. I think people go right back to it, and I think the market gets driven right back up. I don't think that they would be permanent changes, but it's a question of how long until social trends change, as you've pointed out. How long until people get so used to this, or the fear is so ingrained in them that even when they're told everything's fine, they just never would go outside or, stand closer than 6 feet to a person.
Yeah.
I'm hoping we don't go to that point. Like I want to see things return, but it's such a loaded question to say how long until it comes back, and will it, when there's so many socioeconomic changes and forces that might be permanent or semi-permanent.
Yeah.
This is the debate where we could go on forever, right? We don't have that crystal ball to know exactly.
Yeah. But all I can say is winners will always be winners in terms of companies. That's when I look at fundamental analysis in stocks. Company who has the most money, has the best talent, will weather through any economical downturn the best, right? Because even going through COVID, if you have so much cash, like for example, Apple, it's not a stock advice, but Apple has 200 billion, right? So going through COVID, they actually have the money to buy back their own shares at a very low price, and they can actually send their workers home, maybe even pay them less. They say, hey, if you want to move back to where you live, we're going to pay you less, but you have the freedom to do that.
Right.
And then, they can keep buying out small business that are struggling. It has a very thin profit margin. They say, hey, we've been trying to buy you out, but you don't accept it. Now we go give you a golden parachute. Do you want us to buy you out to save you? So they can actually go out and do that. So the big winners are continue to become bigger. Unfortunately, but
yeah. Well, we have these massive Goliath type companies.
Yeah.
So Google, Apple, Amazon, whatever, Microsoft. There's one more big in the tech.
Fame, right? Fame company.
Yeah.
Netflix.
Netflix, the other one. Yeah, we see this huge amalgamation, and that's another thing I don't want to see be permanent. Like I'm so adamant that we keep our small businesses, because that's the culture piece. Like that's like this barber that I go to, such a cool experience. Like they play Frank Sinatra. Before COVID, you get a hand massage, a little pedicure as you get your hair done, and it's pretty awesome. And I would hate to see that go away. So I really do hope we can find our way back from this, but. Again, it's trying to figure out, what do we do as savvy real estate investors? What's your move? And we're going to get into some of the things you're working on. But what's your move now, knowing what's happening in the core of Toronto? Like, are you planning on buying more in Toronto now, or are you waiting? Are you going to buy more in downtown Toronto in, say, a year or so? What's your thought on this at the moment?
I mean, to me, like honestly, I can actually like the business what I'm trying to build now is I reverse engineer everything so that I can work anywhere in the world just with my phone. But I'm still actually teaming up, partnering up with one of the biggest flipper wholesaler in Barrie area, right? Simcoe County.
Okay.
Right? Simcoe House Buyer. My partner's focusing on flipping, then I help them out with the wholesaling of the smaller profit deals. We just wholesale it out, right? And like to me, like buying a house, on the market when it's very hot, when you're questioning where is the outlook of the market, it's kind of intimidating. So we're trying to help the investor and ourselves saying, if we can buy lower than market, we have that buffer in there. And we know that, just like Warren Buffett, right? If we can buy 50 cents on the dollar, probably that's just exaggerating, maybe 70 cents on the dollar. But if you can buy that, we have 30 cents of a buffer. You know that eventually, if a cash flow, if the fundamental is still right, you basically get in almost like risk a lot lower, right? Not risk free, but risk a lot lower than anyone else.
You hedge yourself a lot better.
Yeah.
Yeah, I'm all about the hedging. I certainly want to have that, and that to me is where cash flow comes in. That's a big part of the hedge. If you do a really good burr, you can you have 20% equity built in at the end of there. maybe even more depending on your lending situation. Maybe you've got 25% equity in your properties, and that just helps hedge if your value comes down a bit. Hopefully your cash flow is a bit better because you haven't leveraged as much. But I think I know who you're talking to. I won't name drop if you don't want to. But
no, it's fine. Yeah, I'm Simcoe house buyer. If you guys want to get on the buyers list, deals just get snap up. We didn't have a chance to even broadcast out. Usually, just friends and family say, "You want this?" They just took it. Right? They're ready. They have the credit ready, pre-qualify and all that. So we even have a chance to send out the email yet. But we're trying to up our marketing and try to expand our territory.
Okay.
Just more outside of the Simcoe County as well. And I'm actually thinking about maybe we will start a little bit in pockets of Toronto that I know are up and coming and can still do a triplex or even fourplex legal stuff and can still cash flow. So I know investors are looking at those. So I'm actually waiting out, how much marketing should we put in? Because usually if there's so much competition in Toronto where if you put out marketing campaign, it's just like flushing down the toilet.
Yeah, like the print media, so the traditional wholesale route where everybody's doing these handwritten letters and sending them out to the communities, and those are so saturated now in so many communities, and they're not nearly as effective as they used to be. People actually, like, you'll send it out and somebody will assume that you're the other guy that sent it, and they'll send you a nasty text message. It's happened to me. So you're thinking doing something differently here, but what do you propose to overcome that? Because there is, like you said, a lot of saturation in the market of people being mailed with "I'll buy your house, give you fast cash, quick close, whatever, buy in any condition." That's a common messaging. Are you doing something different? Or are you approaching it differently?
I haven't tried to. I'm still trying to figure it out. Usually I plan out things before I do it. But in Toronto, the demographics in different area might be a bit different. There's a lot of younger generation, a lot of more older neighborhood. I think you need to use different marketing. Some of them, maybe the older neighborhood, they still listen to radio, still watch the TV. But younger generation, we don't even have a cable at home. We watch YouTube, Facebook, and all that. Right. So knowing the demographics in that area, I have to say, hey, so that makes more sense to go that route instead of just take the Simcoe County business model and put it here, right? Because it doesn't make sense. And the Simcoe County is mostly the elder people or, like 40s, 50s, they still have the traditional way, right? So that has to be weighted as well, right?
I love that. Yeah, you can't paint everything with one brush.
No.
There's so many unique elements to different submarkets. And if you treat them individually, you can succeed where others are failing. So this is why when somebody says, "Oh, I tried radio or I tried Facebook or I tried flyers and it didn't work," well, you just think that other people aren't having success with it. They're just pouring money down the drain. No, it does work, but it's about how you approach it. So
and another big thing is consistency, right? So one thing is to say start, but a lot of people just say, "Hey, I did this, spend $10,000 in a month. Oh, it didn't work for 3 months, so I stopped. It doesn't work." But it's not like that, right? If you decide to go in, you have to say throw money in and constantly, kind of revise your plan a little bit, and you have to consistently spending money because. Just like social media, it takes people 3-7 times or even more to start trusting. So maybe the first time they see you on the flyer, they're like, "Okay, I know you." Hear you on the radio, okay, second impression. Saw you on YouTube, third impression. Maybe they'll start building out that trust with you, right? Yeah. I see that with my own, YouTube and Facebook group and all that. It's not the first time. Some people reach out to me after a couple of months and say, "Cody, I saw that. I should have reached out to you earlier, but I didn't. But now, I've been missing out all your courses. You have been raising the price. Now I want to end." I'm like, okay, I probably didn't remember, but great. Yeah, it's finally you're taking steps, right? Taking action.
Yeah, and that's something we haven't talked about yet. And you're doing so many things. It's like you don't sleep. Do you sleep much?
I sleep. I actually walk my dog quite often. I walk my dog 4 times per day, and I'm almost like a full-time dog walker. Yeah, and I come up to your podcast too, and and I try to frame my business in a way that I don't have to. I give more value, make business sense, but I charge a bigger amount, so I have a smaller group of people.
So your full time now is So you did a course on stock hacking, so basically selling put options,
stock option,
selling stock options
for beginners,
or buying them as well. Is that
buying stocks and mostly on the selling side for option. Yeah, and in October, the upcoming one's December 5th and 6th. Maybe by the time this come out, they have to go to the next one to January 15 and 16, which is fine. I raised.
So you're doing it once a month?
Probably once a month, once and 1.5 a month. But
Yeah.
again, I'm not sure how long is that because I started taking VIP coaching clients, which people actually see my trades as entertaining and educational purpose, not stock advice, but actually see my trades and we can have like text message access to me. So I have a handful of that, every month, and that's generate very good money. And right now I'm starting to invest with partners. We have corp, whatever money, he put in, I'll benchmark that amount of money, and he wants to see the results. And he investing very heavily in real estate. So he said, Cody, if you're that golden child, if you let me see that results you say you can't let me see, I will raise a lot of money for you. And further down the road, if you want to open up a fund, I'll help you out. But yeah, that's the long-term thing. Right? I'm not a trust fund baby. So I built it from the ground up, right? So I had YouTube, I have my own course, now I have my VIP clients.
So that's the sequence, right?
Now I have my investing partners, then the next step is fund, right?
So to clarify the story, started working at Honda, day trading at night, then got into options trading, then started your YouTube channel and posted like 20 videos or something.
No, 15
videos. And monetized your YouTube channel, I hear, and make money off of that. But then people started contacting you and wanting coaching on the stock trading, the options trading.
I started personal coaching, but then I figured there's overwhelming, and you guys are paying the amount you guys are paying per hour. I'd rather just put you guys together. You guys have a course, alumni group, webinars, have a supporting system for a lifetime. So in the future, if I do another course, I revise the course. You guys have access to it as an original gangster. You guys are honored, right? You guys support me when no one knows about me, and then you guys put in a trust. You guys will have access to that for your whole life.
Right.
And then I build up personal coaching courses, right? And then I go all the way up to, VIP clients, a handful. Now it's investing partners are bringing in millions.
So this is the next step.
And then the next one will be
now at that point, are you going to still want to do the coaching, or are you
I think I eventually have to. I already not doing personal coaching. So I know other coaches out there that are doing a good job. A lot of times they say, I just need this thing or two. I just refer out.
Okay.
Right.
And so now it's just a course.
Just a course VIP. Yeah. Very soon, once I do maybe 2 or 3 more courses, I think I get confident enough that this recording is a good quality up to my standard. I'm just going to edit it out. Maybe I'll put it on demand, and I'll move on to the VIP, and I'll spend more time with just a handful of investing partner, right? With, millions of dollars. Then the next step, like set a fund, maybe I'll go register route. Yeah. Where,
Yeah, so Cody and I have talked about this before. So I had this thought to basically start a fund, and this is something that before the lockdown I was intending to do, is create a fund and basically select a specific market and go all in on that market, raise investor funds through equity, and develop a $10-20 million portfolio in a relatively short amount of time. With the benefits being, when you raise through equity versus debt, you have the ability to ease that burn. You don't have to be while you're turning things over and getting tenants out and improving units. It's I like to sleep, so it helps me sleep. So what you've talked about is now you have people approaching you and wanting to do this from the sort of stock hacking, options trading side of things, where they would fund you because you're good at this.
Yeah,
and
I come to the point. My partner, I can't disclose who he is. He's very well known in the real estate. He's kind of low key. He likes to sit behind the scene. He said, Cody, I know you does good job. Just let me see it. I'll raise money for you. But I don't want to. I said, do you want to get on the VIPs? I have money, but I don't want another job, right? You're good at it. You do it. I give you the money. I trust you. So I just want to see it. And people behind me are all telling me to be very cautious with stock and option. People tend to lose money on it, so they're waiting to see on it. But if I put my money in, they will put their money in.
Right. Yeah, there's definitely a lot of prospect for growth to you, and it's like mind-boggling how much you're doing, which is crazy. A big part of why I wanted to have you on here, because you're into real estate. We haven't even gotten into what you're buying in real estate and some of your burrs, but just overall, just crazy the progress you're making. So odds are here you're pulling out a lot of cash. I know you're sinking a lot of it back into options trading because that's a capital-intensive business. Yeah. What are you setting aside for real estate, and how do you decide, hey, okay, I want to put this into real estate?
Like, that's an interesting thing. That's a very good question. So when I quit my job beginning after a year, I sat down for a couple of days and say, hey, okay, what do I want to build, right? So I reverse engineer and say, I want to be able to build business that can work anywhere in the world.
Hey guys, I just wanted to take a moment and give a shout out to a couple of very important local businesses to me. As you know, this lockdown has been tough on everyone and small businesses have been taking the brunt of it. So there's two specific businesses I wanted to give a shout out to. This is a completely unpaid promotion. They didn't ask me to do this, but I wanted to give them a shout out because I think they're really important and I want to see them be successful. So one is New York Men's Grooming Lounge here in Burlington, Ontario. I always see Sergio every month. They do a fantastic job. Their atmosphere there is fantastic. There's usually some Frank Sinatra playing in the background. They're a great establishment, even if you just want to go in and have an espresso or have a beer and chat. It really is a lounge and social location, which is just such a unique concept in today's market. Really like those guys. I really want to see them succeed. If you're looking for a fantastic men's haircut and grooming experience, I highly recommend them. The next one I wanted to give a shout out to is Dr. Mike White over at the Momentum Health Clinic in Hamilton. Dr. Mike has been able to help me many times over the years when I've hurt my back. He's a chiropractor, so I'd be in a position where I couldn't even walk, I couldn't turn. I was in an agonizing pain and I'd go to Dr. Mike and usually I'm 100% better within a week. Now, I know it's a touchy thing with a medical service, so always consult with your medical professional before seeking any form of treatment. I just wanted to let you know my experience here, and I certainly think Mike White is worth considering. I've included the details for both of these contacts in my show notes. Please show them support if you see fit. Thank you so much. I really appreciate it. Mm-hmm.
So real estate is kind of at the borderline where I have property manager, if I have a good GC,
right?
I have good bookkeeper, good accountant, lawyers, the power team, it could happen, but you still need kind of be hands-on. If something really happened, you still need to sign papers and all that. Yeah. So that's why I built this entire stock option courses, VIP, and because I can do it anywhere. If I manage another portfolio, I can do it anywhere in the world, right? So now that with all the money come in from the active business, I haven't taken them out. They're just sitting there. That's why I was calling my accountant and say, what should I do with the money, right? So it's just a fun story on the side. I'm actually looking at getting a Porsche GT3 2021.
Why not a GT2?
I don't know. That's my first Porsche GT series, right?
GT2 RS. That's the one you want.
That's like $500,000. and here's the thing. Here's the thing I blew up a lot of people's mind is, in order to get a GT2 RS, you need to get all the smaller GT in order to get to that.
Oh, they won't let you have it?
No, it's just like buying an Hermes bag.
Yeah.
When you walk into Hermes, they won't show you the bag. It just show you have to buy a scarf, buy a watch, and then if you buy enough, they will say, hey, so I have only one bag, this ugly color. If you don't want it, it will be gone by tomorrow. Then you buy that, and eventually they bring you more. Right, same thing with Porsche, right? You have to get in the door. You gotta
be in the club,
In the club.
Yeah.
And hey, I'm not here to brag or anything. The reason I did it is because of marketing purpose, and is because it's actually a flipping business. If I buy a GT3 right, it's just like if I buy it lower than market value, I can drive for a couple years and I can sell it for break even or even more.
Yeah. So I actually know a guy with a GT3. And
my close friend works at Mercedes and FAF, Porsche FAF, I sell. So I mean, the water is very deep, but I get to the level where I think, hey, all my active income and the corp can actually be. So I was talking to my accountant, to be treated as kind of like a flipping business, just like flipping a house. I use that money to buy a car. The car can be an inventory. And down the road when I sell
so you're going to flip some cars.
I'm going to flip some cars, but technically I'm driving my inventories around.
Yeah.
So,
well, that's a fun game to be in. You get to drive fun cars. The shame, did they sell that one in manual? Can you get that one manual transmission?
A GT3?
Yeah.
I think the new one comes in manual, but no one could get on board, and I'm trying to pull some strings to, see if I can get on the wait list. Yeah, for anyone search YouTube, GT3 2021, because of those YouTube from Top Gear that expose a little bit of those detail and the volume of like deposit putting down, all the Porsche around Toronto just blew up, right? And then meanwhile maybe I'll get a used GT3 and say, hey, I'm in the club.
Well, yeah, you still pay for that, right? That was the funny thing I heard with Porsche is that it goes up in value.
It goes up in value. So I don't want to buy depreciated value. And that's a lot of people. What I thought earlier is like car is a depreciating value. But no, if you buy the right car,
Yeah, like a collector's item versus an everydayer. Now, of course, if you drive that car like you drive an everyday driver, it probably won't hold its value quite as well.
Yeah, but you probably have a second car. Yeah. But this is a good marketing tool for me as well, right?
Yeah, this is, a whole nother level for a lot of our listeners, like the way you're thinking. Like you've achieved so much success in your active business that you have a good chunk of money in real estate. You have a good chunk of money doing something that I know a lot of investors doing, real estate investors that are investing in options trading as well. And I'm all for diversifying. I have never gone down this road of options trading. I've read those books. What are the two ones? Lee Lowell's.
Yeah, and then Derek Foster. Lee Lowell's. Yeah, and there are a couple other ones, like they're more deeper ones, but those two are, a beginner to intermediate.
Yeah, but I read them both, and I have to say,
what do you feel about those books?
Did not feel like I could get started after reading them,
and that's the big problem, right? Because so my student actually signed up for my course and said, Cody, can I read some books to get prepared? I'm totally new. I said, hey, you know what? Now that I get my first course down, go review those recording and with the slides. Yeah. Instead of reading a book, the first time you get 50%, maybe 30%, second time 70, third time 80. So a lot of times what I said in the sentence in the course, it takes you experience to actually realize what I mean by that sentence.
Right, yeah.
And I try to put everything together from step 1 to step 25, how I set up account, how I do fundamental, technical, exactly the way I do it to share it to you. So if you don't know anything, follow the footstep, okay? Not stock advice. I don't give stock advice, but at least I will help you eliminate a lot of stock that you will lose money on.
Right.
That's helpful already, right? And you just follow my footstep. And then if later on you say, hey, Cody, this works well, this doesn't work for me in terms of risk and reward appetite or lifestyle-wise, deviate from it. But at that time, you know what's the risk and the reward for deviating, right? So
and I think that with this stuff, it makes a lot of sense to me. And I went to business school and I understood what options are. The thing is, I'd never been a stock investor. Real estate was where I invested my money, and real estate makes so much sense to me. So it's kind of like learning an entirely new skill for me. It's not that far off of things that I know, but it is a little bit of a time investment. Now, for the average person that's investing in real estate and they're able to generate their 30% return per year, which I think a good real estate investor should be able to do without question. If you're able to do that, is it worth that person investing the time into learning something like options trading as well to supplement or to diversify their investments?
Very good question. I get that question all the time. And this is a very high level question. And here's my answer. So if you have a good real estate portfolio, great. Let it keep growing your wealth. Let it keep appreciating. And you get 30%. Like for all my Leo duplexes, 75% ROI. And you're like, Cody, why are you still doing stock option? Yes, this year has been a phenomenal year, beyond 100%, but that's not going to happen every year. But why do I still do it? It's because as a real estate investor, a lot of them are very rich on paper, but they cannot eat the equity. And they don't want to sell because they know it's going up more, but the cash flow they're getting is just not supplementing their lifestyle.
It's hard to do that in Ontario. It's hard to get that cash flow unless you go north. And, there are certain markets, but it is harder to do that, especially where we live, down in the GTA.
Yeah. And even for all my cash flow and real estate, all my Leo duplex, I get around like 500 to 1,000 per month. Bought it in 2019. I converted myself. I bought low and all that. Yeah. But again, all those money, I left it in there just for in case the roof goes off, or
I do the same.
I pay for property management. And I pay for maintenance, right? So when you account all those in, a lot of time, it's not really 500 to 1,000. It might just be 200 to 300. And it's not worth it taking it out. A lot of people say, okay, you need to own 10, 20, 30 legal duplex. And now you come into a scaling issue. Yeah. It's not just like, it's the same doing 2, 3, and then doing 20, 30. Now you need to have a system. You need to have a GC. You need to have a bookkeeper and all that.
It's
just more people to manage now. But stock option is, if you have a phone, at the beginning, you need to put in the time to learn it. But once you learn it, 15 to 30 minutes, anywhere around the world, you're not stressing about the market tank. You're buying good stock.
Yeah.
So it's just like real estate. If it tank, and buying good real estate.
So you apply the same principles.
Same exact
So you're talking about, so an example of what you're talking about, like I buy fundamental real estate in areas that I know are diverse. You're talking about buying stocks from companies that have been around for, 50 to 100 years.
Lots of cash reserve. Revenue has been growing for the last 5 years. Net income has been going well. Top line, bottom line. And the outlook is just great. Whether there's another COVID or another something. They still be able to weather through it and come out even stronger, right? So same mentality. I don't want to lose, right?
So interesting. I just like seeing the parallels between this because I think we think very similarly, but we're in different things. But you're also doing real estate too, so I do want to dig into that.
Yeah.
So let's dig into one of the places you're putting your money here.
Yeah.
Do you have? So you mentioned you did some Burr projects, some duplex conversions.
Yeah. That one's in Barrie, Simcoe County. So
okay. So what were you? Give me an example of one. Like, what did you buy it at?
I bought it at $405,000.
405, and this was last year.
2019, beginning of it. The owner was in it. They were originally, here's a funny story. Originally, they're going to move out east, but then, he was going to move out east, so he sold it to me.
Mm-hmm.
I legal duplex it. I spent around like $80,000.
Okay.
I thought you want to know the number, right?
Yeah, 80,000. So 80,000
and
including carrying
everything.
costs? Yeah, okay.
Everything. 80,000
and legals and everything.
Took me about a little bit longer, like 5 months.
Okay.
Right. So, first month's in, we got the upstairs done. Upstairs really just bath. We got new tiles, a new floor, new vanity.
Mm-hmm.
Kitchen, we didn't have to do much. It was beautiful and just new floor throughout, new paint. And then after 1 month, we just rented out. Right. So that was able to carry the entire cost almost.
Okay.
For the entire house. And then next 3 to 4 months, basically we're gutting the basement and then putting the waterproofing wall up and then just do it the way we do.
So you rented out so focused on the upstairs. I've never heard anyone say they did that because who would want to be in the upstairs when you're smashing things up all in the basement?
And here's the funny thing, right? And who moved back in? The owner who sold me the house.
Moved into the upstairs?
Yeah, he said, sorry, I'm not moving out east. Can I move back into my own house? I'm like, yeah, but this is the rent you're paying because I make it so much nicer now. New floor, new vanity, new bathroom, new paint, everything. He said, what do you want me to pay? I said, $1,750 plus hydro. No, yeah, cool.
Okay.
So he moved back in while we're like chipping out the basement and work on a renovation, right? So that works out really well.
See, for me, I just avoid that situation because I'm worried about the complaints I'll get. Like, I just don't want to deal with it, so I'd rather keep it vacant. But I do see the point. Like, that's great. If you have that cash coming in, it helps cover your carrying costs.
Yeah. So that worked out really well. And then I got refi, I think, earlier this year around like 575.
575
earlier
value?
this year. So now it's probably higher.
Okay. And then, so your new mortgage would be about 80% of that?
Yeah.
So about 460. So your net investment on this one, it's almost a perfect Burr. So you were into it for 485,000. So 405 to buy, 80,000 to reno.
Yeah.
And then we'll just subtract 40 or 460,000 off of that. So $25,000 in.
Yeah.
So let's go ahead and take a look at this. What did you have the place rented for, top and bottom?
Top 1750.
Yeah.
Plus hydro because we separate the meters.
Yeah. Okay.
And the bottom right now is I think is 1550 plus hydro again.
Is there another hydrometer for the?
No, there's no third. There's only two.
So who pays air conditioning and who pays for the furnace?
Upstairs pay for the air condition. So I
okay.
I account for that.
Yeah.
Usually the basement is the one that's calling. It's too cold. Can you turn it up? Right. So the upstairs is where they really need the AC.
Okay.
Right. So upstairs is paying for it. They know. I know. Right.
Okay.
So I let them know.
What about the furnace blower? Which power is that on?
I think that's downstairs. Yeah.
Okay. So one gets one.
We balance out, right? In the winter, really basement needs more, and
Yeah. Fair. I've heard that argument before, although tenants can be something else. Anyways, okay. So you're 3,300.
But I'm paying for they're only paying for hydro. Right, but my furnace is natural gas. I'm paying for the natural gas.
You're paying for the natural gas and water.
So they don't have to complain about it.
Yeah, it's funny though. People find a way to complain. Okay, so you're at $3,300 a month between those two units. What are you paying in taxes there per year?
Paying taxes? I don't pay much.
Ballpark?
Because like first year, I almost written everything off. I could have written more off, but I was advised by my accountant.
No, I mean property taxes. Sorry.
Oh, property. Yeah. I think it's like around 3,300.
3,300 as well. Okay.
Yeah.
All right. And insurance there, what, like 1,800?
No, like 1,600.
1,600.
This year is 1,600.
Yeah, they've been going up.
I called them.
Yeah, I called too. Didn't help.
No, they're saying sorry. Overall, it's going up.
Yeah, they're like everywhere's gone up. My insurance went up 20% probably the previous year, and then this year probably another 50%, 30, 40%.
Yeah.
It's been going up pretty aggressively. So you have management there, is that right?
Yes, I have property management there.
Is it about 5%, 10%? What
I pay, so they charge a flat fee of first unit $99, second unit $50,
Okay, so 150.
So really, it's 5%. Usually, you pay 10, but because of their fee structure,
So it works out to be about 5%. Do you pay leasing fee on top of that?
No,
No leasing fee
it's, I think $150
to release the property. Oh my goodness!
No, for first unit.
Yeah.
And if somehow the tenant left early because whatever reason, they will freely replace it for me. So I had a very hard to deal with tenant that has a lot of quarrel with downstairs tenant, and thank God they just say, you know what, Cody, I want to cut it early. I'm like, yeah, do you want me to help you move? Do you want me to hire your moving company? Like, what do you want me to do, right?
You're getting some insane deal on property management there. I've heard people paying, after you consider releasing fees and management, they're basically like 12%, 10, 12%.
And then I'm very fortunate. So far, it's been so good. I have very close relationship with all the handyman, all the leasing agent, and the property manager. And, I found ways to build good relationship. I buy them, I give them gift card, whatever. I buy them lunch and all that. Just to make sure I'm always on the short list to pick up my phone call.
It's good. Yep. Be good to the people that help you. That's for sure. Utilities, probably about $2,500 a year, you think, or?
Yeah. I mean, like hydro is probably like what? Hydro I don't pay. Water is probably $80.
$80 for water
per month. And, average out probably 150 just to be safe, right? So 230 times 12. Yeah. Maybe 2,500 or 3,000.
Yeah, so between natural gas and water. Okay, so 2,500 we'll say there. Okay, so you had a value, you said, of 575. Just put this in, see how these numbers look. So your cap rate based on that value looks like it'd be around 4.8%.
Yeah,
just in case you're curious.
No, I actually had the same calculator on my computer. Yeah.
Do you use my spreadsheet or you use a different one?
No, I think I did it was 4.7.
Okay.
Last year, but.
Okay, so what kind of mortgage did you get? 30-year?
30-year, it's with, I think, BMO.
In the twos?
Man, I got it beginning of the year.
So probably like high twos.
I locked in for like, I think it was like 3.09 that time, beginning of the year, right? That's before everything came down.
Yeah, before it all came down. So if it was 309, you'd have about a $1,956 a month mortgage payment. So that's a $354 cash flow.
Yeah.
After everything, which is
what
solid.
I said earlier, right? Yeah.
That's why, it's not worth taking that.
No.
To me, I don't touch any of my cash flow except for when I get a tax bill from the government that was over and above what I was expecting. It comes out of there. Renovations, anything I do for the properties comes out of those accounts. So I just like that as a nice safety buffer. So if we factor in that you're really only in for 25 grand on this, after we figure all of the things that
should be 70-something% ROI.
Yeah, 25.
Let's see if I'm right. My quick
so
math.
I've got 91%.
Oh, 91,
here.
So even better.
Well, I'm factoring in a 3% appreciation rate.
Yeah, I factor in 2. So
2,
maybe,
okay, so that would explain the difference. So if we went down to 2, then we'd be 75. Yeah. So we do principal pay down, appreciation, and then your cash flow. For anyone who doesn't already use my spreadsheet, just go to my website, andrew-hines.com.
For free.
And the cash flow analyzer is there, so you can calculate it the same way we're doing it here. But anyways, so that's a pretty solid deal.
Yeah.
And obviously, in future years, when you calculate return on equity, it's not going to be quite as much. So then you got to start thinking, hey, do I refinance this? What do I do next? I think that 3% is a really conservative estimate for properties increasing in the future because of the amount of inflation that we're likely to see over the coming years. I think that we're going to do much better. But again, no crystal ball. We don't give advice here. We just share our thoughts, right? So Cody, this is a really cool deal. We've talked about a lot of different things.
Yeah, we just go all over.
That's what I do.
I got so excited.
That's what I do. Anything you wanna kind of leave our viewers and listeners with as far as advice? We have a lot of established investors that listen to this podcast.
I'm probably one of the youngest one on your podcast, right? And who am I here to offer? So I don't say anything I don't do. I don't teach anything I don't do myself. That's all I can say. So I'm very authentic. I share all my mistake, and all I can say is anyone who's listening to this, younger than me, older than me, you're in 50, 60, who cares? A lot of time we basically are counting how many apple we have around us, but we never look at there's 100 apple out there. We always counting and say, how long can we last with these apples? But we never have the abundance mindset and say, okay, I have 5, maybe I'll survive for a couple months, but how do I get that 100 apples so I can survive for years and even more? So when I change that mindset, that's when everything just took off, right? Maybe in a way, I had a day trader mentality. My heart is a lot bigger.
Yeah.
I'm willing to take risks, maybe at a younger age and all that. But I do have a little bit of saving, but it's not like enough to be like last for a couple of years before I just quit my job and all that. Even though like my stock option is actually, replacing a 6-figure income. But again, market could turn and all that, right? But I really took the leap of faith and knowing that, hey, I might not figure out in the first try, but I think I have a good idea with all the failure and success and all that. So I just run for it. And then even in October course, I didn't have a chance to drive around my course, but 15 people sign up now. For the upcoming one, there's like 20, 25. I have to cut it earlier, so I want to keep it small. Who knows what the next one would be, right? Very, very soon, I might not be doing course. So think about where I came from a year ago and to now. It's crazy, right? And then I know it's just the starting of it. So for anyone who's listening to this, think that's not possible, whatever. I'm an immigrant. I was an engineer, right? I was asking Math 12 question when I first came because I don't understand the question. After 10 years, this is where I am and I know where I'm heading.
So determination was a big part of this. Yeah,
a lot of people have a good plan, but the execution is the hard part.
But no one perseveres through those long nights unless you just absolutely love what you're doing every second of it, or you're just determined because you're trying to accomplish a goal.
Yes.
Now, whether that goal, you said you want to be completely independent locationally.
Yeah.
Because I know you have family overseas. Your dad's back in Taiwan. So you mentioned to me before that you wanted to be able to just flex and go where you needed to whenever you needed to.
Today after this podcast, I'm just going to book a flight, go back to Taiwan. I want to be able to do that. And I still be.
So has that been motivating you right from the beginning, saying I need to make something of myself here so that I have the flexibility to go home one day?
Or maybe I'll be a snowbird, no more winter stuff, and just fly down south or, But it's not like I'm not doing anything, just being more efficient with my time and helping more, giving more value and charging more with a smaller group of people. That's just the entire mentality I'm going for, right? And every step of the way, the course, make sure I offer 10 times the value.
Yeah.
VIP offer 5-10 times. I want to say, hey, if you pay for this for a month, I want you to get it back in 1 to 2 weeks. That's what I want to. I can't promise that, but that's what I want to see. So it makes business sense, right? So later on, if you partner with me, and investing, say, hey, even if I'm getting 50% of it, I want to make sure that you get enough that it's way more than you can get from other banks' advisor, right? So you're taking the risk, right? So it all makes business sense in my sense, right?
Yeah, no, it definitely is something that I think is worth exploring for investors in real estate. I do believe in diversification, so it's something that I've been interested in. I know I've spoken you on this. I'm like, Cody, do you think it's worth my time? Because I don't like getting distracted. At the same time, I think diversification is good. So I've been on the fence about this since Erwin mentioned it to me about a year and a half ago.
Yeah, I mean, there's a course out there that you don't have to take mine if you don't want to. Like, take other ones, but take action on it, right? And start doing it.
Yeah, definitely. Just for context, because I know we didn't cover this, what's your real estate portfolio look like
so
overall?
I bought, the first house in 2016. Basically, I don't want to use up my first-time home buyer. So my mom wants to buy a bungalow in Toronto near Eglinton and Dufferin. So that's where the new LRT light rail train coming up in 2022. Now maybe 2023, who knows? But that's the fundamental why we bought it there. So at that time, I saved up a little bit from internship and just for 1 year of pulling a lot of overtime. I say, Mom, here's 30, 50,000. Here, just, hey, I'm part of it. Right. Okay. And I saved up more in 2017 where I bought my first single family up in Alliston. Okay. I say, hey, if I'm going to stay here for 5 to 10 years, I didn't know I was going to be doing this. Yeah. So I say, if I'm going to stay here for 5 to 10 years, that's how much I'm going to, I want a house that's with a family in. So I bought a single family there. That was, I think I bought it for like $460. Right now it's probably $620. If I want to sell it, I have a good tenant, so I don't intend on selling it. All that's my principal residence. So really, if I sell it, it's all like probably 250K is coming back to me. Mm-hmm. And then there's 2 more legal duplex in Barrie right now, and 2019 convert both. Yeah, bought it like 405K, 430K, and the one I show is 575. The other one's actually appraised at 620 because I bought it at 430. It's a bigger 60 by 120, a bigger lot. Okay, and it's actually a very raised bungalow, so it's nicer, right? The basement looks like you feel like you're living on the first floor. Yeah, so it's a little bit more premium, but it's great. And
I like the properties with more land. Here, just
and then the garden suite that's down the road, right? I know
Yeah.
like Barrie has been very progressive, and I have friends that are already putting in their basement.
Yeah.
And I'm just waiting for their number.
Yeah.
And
Yeah.
maybe about 150 just for one unit in the back.
So it won't be a laneway house in your case because there's no laneway back there.
No.
But you could potentially one day, we know it's coming in Ontario. They've said it's coming at a provincial level. Now it's up to the municipalities to implement this. So we have an indication that it's coming.
No, you can actually do it now. In Barrie.
In Barrie, you can already?
Yeah.
Okay.
Yeah. No, you don't need to have laneway in the back. You actually do it.
So
And then
you're
you just need one more parking probably.
Oh man, I would just casually build that. See, that's so cool. Like you don't have to be in a rush. You just, one week you have the concrete pad poured and then you go up from there. So that seems, that's where if you can have the extra land, like I've got one property that's 230 feet deep. It's only 40 wide, but I have room in the backyard for more still.
Privacy in the back.
Yeah. So, and I have another property where I was 60 wide and I built the additional unit in the backyard and now they both have their own private backyard. Both units have their own private backyards.
Nice.
So just like things to do when I'm thinking I'm going to keep this long term, I want to make it great.
Yeah.
And those are just, if you have extra land, you never know what the municipalities might do down the road to open up options for you.
Yeah.
So yeah, just a little finishing off on real estate here. Cody, really appreciate this. Super interesting to talk to you as always. And if people wanted to get a hold of you, where do we send them?
I mean, I have a YouTube channel. If you search up Cody, C-O-D-Y, last name Y-E-H, right? I have the hat here.
Yeah.
Say yeah, right? Say yeah to fire.
Yeah.
And that's just my branding. People can find me on YouTube. And I do have a private Facebook group, just for a general Facebook group, where I talk about stock and option. I post things, update about markets, things to watch out, mistakes that I made. Hope people don't make it. That's just for people to talk about their own strategy. As long as it's not a scam, not a self-promotion, I will allow it. But I do have an alumni group where if they sign up for the course, they will have lifetime access to that. But YouTube, Facebook, my Facebook group, we'll put a link in the description.
Send me the links for that. I'll include them in the show notes, and then people can kind of see what you're all about and maybe get to interact in your little community there. That'd be great.
Yeah.
All right. Thanks again, Cody. Really appreciate it.
Great. Thanks for having me on.
Thanks for tuning in to today's episode. Please make sure to share this episode far and wide. Help it help more people. I really appreciate you tuning in. Thanks. I'll see you on the next one. Hey guys, I just wanted to take a moment and give a shout out to a couple of very important local businesses to me. As you know, this lockdown has been tough on everyone and small businesses have been taking the brunt of it. So there's two specific businesses I wanted to give a shout out to. This is a completely unpaid promotion. They didn't ask me to do this, but I wanted to give them a shout out because I think they're really important and I want to see them be successful. So one is New York Men's Grooming Lounge here in Burlington, Ontario. I always see Sergio every month. They do a fantastic job. Their atmosphere there is fantastic. There's usually some Frank Sinatra playing in the background. They're a great establishment, even if you just want to go in and have an espresso or have a beer and chat. It really is a lounge and social location, which is just such a unique concept in today's market. Really like those guys. I really want to see them succeed. If you're looking for a fantastic men's haircut and grooming experience, I highly recommend them. The next one I wanted to give a shout out to is Dr. Mike White over at the Momentum Health Clinic in Hamilton. Dr. Mike has been able to help me many times over the years when I've hurt my back. He's a chiropractor. So I'd be in a position where I couldn't even walk. I couldn't turn. I was in agonizing pain and I'd go to Dr. Mike and usually I'm 100% better within a week. Now, I know it's a touchy thing with a medical service. So always, always, always consult with your medical professional before seeking any form of treatment. I just wanted to let you know my experience here. And I certainly think Mike White is worth considering. I've included the details for both of these contacts in my show notes. Please show them support if you see fit. Thank you so much. I really appreciate it.